Hi, my name's John Bainham, and I'm an award-winning financial planner from Retirement Income Group, and I'm here with Evan, the other financial advisor from Retirement Income Group, and Jason, who's a fund manager for the Global Income and Growth Fund at NCM Investments. And Jason, thanks so much for coming and taking the time to speak with us today. I know we're currently at the CART Wealth Management Conference in Niagara Falls, and you're traveled all the way from Calgary, and you've got a really busy schedule, and you're one of the speakers here today. But yeah, maybe tell us a little bit about yourself and what you do with the NCM Income Growth Fund.
Okay, thanks for having me. It's nice to be here. It's my first time in Niagara. The view here is absolutely spectacular. I'm spoilt in Calgary and being able to go to Banff, but this is just right there. It's fantastic. I absolutely love it. Yeah, the lead manager of the NCM Global Income with Growth. There's a couple other funds for private clients that I run, but I'm here to talk about the NCM Global Income Growth. And at the high level, what we're trying to do in that portfolio is it's an asset allocation strategy. And the way I like to summarize what I do is very aggressive on the asset allocation call, stocks, bonds, cash, but very, very conservative in the security selection. You know, we're not reinventing the wheel. It's all about portfolio construction and risk management, but getting long-term capital appreciation over the long.
Jason, thanks for being here. I'd like to ask you a question just regarding markets this year. We've been pretty much on a downtrend all around, and just wondering what your outlook is for markets, the S&P, TSX, and what your outlook is towards the end of the year, and what your thoughts are generally on that.
Okay, that's a good question. It's the salient point that everybody's trying to hit home. Are we at a bottom or are we not at a bottom? I would say it's going to be volatile. I think the key question that people have to come to terms with regards to where the market's going to go is, at the end of the day, when is the Fed going to stop hiking interest rates? And that's what people are wrestling with. You know, your asset values, doesn't matter what they are based on the expectations of cash flow. And those cash flows have valuations. And when you don't know what your terminal value is or your discount rate, it causes volatility. I expect lots of volatility through the end of the year. Well, we've got 75 basis points, we've got 50 basis points. You know, at the beginning of the summer, we were thinking the Fed would have a terminal rate of, 3.75. Then it was 4.25, then it was 4.75. Now people are talking 5. Once we get a handle on that, that's when I believe the markets will get the firmness that they need to start pushing forward. The market's a discounting mechanism. You know, like we get talking about, the economy, it's good, it's bad, but the markets, it's about being better and worse. And once they can get a better handle on exactly what the rates are going to be and what the economy is going to look like, then markets will drive forward. But until then, it's going to be all over the map. We were talking, before about the VIX and the volatility and all that sort of stuff. That's not going away. It's going to be there. So portfolio construction is a huge part of making sure that we're just mitigating that. I firmly subscribe to the old adage, if you don't have to take the risk, why take it?
Right.
And that's what I'm trying to do in the portfolios.
Good. Thank you very much.
You bet.
Yeah, that was a great answer. Thank you. And then I guess just to sum up too, because we've talked about this on our previous webinars. You know, when you're valuing a stock, there's something called the discounted cash flow model, and one of the key variables is interest rates. So kind of what we're hearing from your explanation is that because we don't know where interest rates are going to ultimately end up, we don't have one of the key variables for how to value a stock. So we really, don't have any kind of frame for like where the market's going to be heading. So really, it's going to be all over the place. The VIX is over 30, which is a volatility measure, and so it's going to be bouncing around. But what I'm hearing is that in your portfolio is that you're not taking risk unless you ultimately really need to.
Exactly.